Hey, welcome everyone to Options with Hans. I'm Hans Albrecht, your friendly neighborhood options trader. 15 years as a professional options market maker, another decade after that, managing equities option cash flow funds, right? These funds that use options as a way to harvest premium for income. $1 billion in option strategies managed across technology, AI, commodities, US, Canadian, Australian, all kinds of places. I've done it all. I've even developed and launched a NASDAQ cover call fund the right way, not the dumb way that a lot of funds adopt. When I started, I said, listen, what are you guys doing? You can't just do the same thing all the time. So if you're into high level options education with real world edge, you're in the right place. Please like, subscribe, grab those free ebooks down there in the description. And when you do, I'm going to put you on the LEAPSTRADER program list, which has exploded in popularity this week. And then I'm also going to put you into my 4-day options challenge completely free. So I'm going to walk you through finding great stocks, which of course is number one, smart setups, options trades, of course, that generate consistent income. So you don't get the fluff, you get the real stuff here. And don't just sign up, watch the videos. Take a moment, watch those videos. And if you never, ever buy anything from me, that's totally fine. Enjoy the training, maybe get a new perspective on how things are done properly, on my views on volatility and sentiment, because that's about half this battle, right? And you'll maybe enjoy your investing journey for years to come, partially thanks to me. So as always, this is for educational purposes only. Your trade, your responsibility, and if you're okay with that, let's get right into it. So why listen to me? Well, first of all, I love technology and AI. I've been covering this area for about 8-9 years now. Uh, I spearheaded at one of the big ETF companies. I spearheaded the Industry 4.0. So I was constantly telling people. I presented to 10,000 people. I did this while I was a portfolio manager and recommending picks like ASML and Netflix. I recommended at 225. Um, Lots of great plays. And so, I really talked about lots of things. NVIDIA, I talked about, I said, listen, this is unbelievable. This company is unbelievable. And that was at $4 pre-split. So here we go. I wish I put all my money into it, but I didn't. Anyway, we're here to find new opportunity. And also I graduated. I've written articles on this topic for publications. I've been quoted 100 times on things like this. So, and I graduated from the Oxford Artificial Intelligence program. Got a bit of the academic background, but remember, this isn't about academics all the time. And so, what we want to do is always kind of combine very, very good, uh, deep knowledge of how options work and how stocks are to be evaluated, but we'll combine that with an actual effort to make money, right? No guarantees in investing, but I'm here to help you be more prepared. So today on our Millionaire Monday agenda, and it's because I think this new phase of AI is going to make a lot of new millionaires. So Millionaire Monday is going to be Palantir. We're going to talk about it. What's it all about? We're going to talk a little bit about fundamentals. I don't want to make these super, super long, so I'm going to try to keep them shorter and shorter. Technicals a little bit, not much. Option pricing, very important. We'll talk about Skew, things like that. And then, of course, leaps to love, right? Remember what it's all about. You can be right, but if you don't make money, you're really not right. So let's figure out ways to actually move the needle and put some cash in our jeans. So I want to talk about why Palantir's phones are about to be ringing off the hook. They better buy some new phones. That's kind of an old style saying, right? Ringing off the hook, but we used to have to have a phone kind of hanging on the little cradle. They are going to be ringing off the hook, right? This isn't just a government contractor anymore, right? A lot of people think that. Palantir is really becoming the go-to enterprise AI platform that sits on top of organizations, to help them adopt AI. They don't know how to operationalize this stuff, right? This is going to be a big, big opportunity for companies that are just kind of not really sure how this sort of figures into their system, right? And I think this next wave of AI adoption is going to be seeing companies race to partner with firms like Palantir to stay competitive, right? That demand could be explosive. This is a real company, right? This isn't some up and comer. It's expensive, $300 billion stock, but I think the upside is exceptionally strong. They're already working with Fortune 100 companies. They are bringing in cash flow. They are doing all the right things. They're working with defense. They're working with healthcare, you name it. I'll just talk about some of those things in a moment. And guess what? We're going to look at how we can use options to actually turbocharge that upside, that inflection point that I think we're at. What I see is that this is sort of this AI adoption panic that is going to start slowly and it's going to ramp up. This is not linear, right? This is going to be the shape of panic. In options, we call that convexity, right? The convexity of being able to buy an option, a call for $1 and turn it into $20, right? That's convexity. I think that is almost what's going to happen in this kind of industry, right? So CEOs across all industries, and this pushes into everything, they're going to be waking up to this brutal realization and sort of go, well, we don't really fully understand what AI can do. We're hearing, we're seeing things, we're starting to kind of discover what it might be able to do. And we're hearing that competitors are already doing things, and we know that we cannot afford to be left behind. So this is not going to be a cyclical trend. This is a utility shift. AI is going to be like electricity. It is going to be like running water. It's not going to be optional. If you fail to integrate it, I mean, apart from maybe some very small areas of the economy, if you fail to integrate it into what you're doing, you may become irrelevant, right? So Palantir is positioned as this incredible enterprise scale kind of AI system that can kind of make sense of somebody's data. They can bridge these old systems with new ones. They can deliver an outcome, right, for you, right? They're not just giving you tools, they're going to deliver you an outcome. So you can think of Palantir as being very, very important because it's an outcome company. It's going to address a need and an increasingly prevalent pain point out there. What's the pain point? It's the risk of falling behind in the arms race. It's literally going to be an existential issue, and companies are going to pay just about anything. That means companies like Palantir, and there aren't too many of them. As Palantir gets more and more powerful and bigger, they just start to feed. There's this like kind of a network effect. It feeds on itself, and they have great pricing power. They can charge you through the nose. So the phones are ringing off the hooks. People are going to have to start realizing what's going on here in this inference phase of AI. Companies are going to need to figure out how to make these real-time decisions. They're going to be driving ROI. They're going to need guidance. They're going to need implementation. And the revenue for Palantir, because of this phase, is going to just skyrocket. Right? So I like to call it, I think this is a Jay-Z song maybe. 99 problems. 99 problems. This is going to be number one. And they're not going to know exactly where to begin, right? I can tell you sort of just talking to people, you're like, oh, I can do this, I can do that. I'm hearing about this, hearing about that. This is going to sink in and permeate throughout many, many industries. And so Palantir is going to sort of be this translator, an architect, a facilitator of what you think you need, and a sort of company that's going to come in and clarify things. So this is that scramble phase. And then, of course, they are not a cheap stock. We are talking about a very, very expensive stock. You can see right here. But I don't think that is of massive, massive importance. Would I like to buy the stock earlier? Yeah, of course. I did buy it lower. But I don't think it's too late to get in. And I think you can kind of scale in a little bit. But I think there's the potential for this company to maybe triple, quadruple. And when we start talking about the option plays that we can do, that means incredible explosive potential, right? So it's very much a part of my Leaps explosion part of the portfolio, right? Hedge LEAPSTRADER has core, solid, quality, super dependable kinds of companies. It has LEAPSTRADER AI, and then it has explosive potential ones. So Leaps explosion. So let's take a look at the couple of interesting metrics here. Total US consumer commercial customer count, right? So look at the customer count on the consumer side of things. So they are going to realize that there is so much massive opportunity out there outside of government that they are going to fill that. They're not going to be able to hire enough people to actually fill this demand. And so you're seeing it. It's not that this is necessarily new. They're getting these commercial contracts. You can see they're working with Ferrari, Merck, Tyson Foods, Westtrack. It's happening, right? And then they're still going to continue working with the government because the government is going to need to continue to improve their processes in defense, et cetera. And in fact, they just won a $795 million contract modification. So basically an extension. So the total award's over $1 billion. So they have their first $1 billion contract. And given what's going on in the world, for example, right now, I think, federal spending could actually accelerate with a company like Palantir under sort of new defense priorities. And they're going to be well positioned to take advantage of that. So maybe working on the Golden Dome air and missile defense project, things that Trump is going to be very, very interested in, right? So Palantir could be playing a very key role, an increasingly key role in securing much of the funding out there. They're not going to mess around. They're going to go with the best. So government, AI, ventures, et cetera, and then this commercial side of the business. So I think that's why the market's starting to get very, very excited about this stock. Let's take a look at this one again, net dollar retention rate, right? So this, you can see this explosion here after a lull. You can see that customers are spending, they're staying, they're spending more and more and more money. This is a turning point, right? And so you can look at 2024, Q1 2024, commercial revenue up 40%, commercial customers up 69%, right? So I think they went from like 80 to 150 individual customers. These customers pay a lot of money, 19% revenue growth, and then to this year, 255 million in U.S. commercial revenue. So year over year, 71% increase there, and 39% year over year increase in customers again. Again, not a cheap stock. Palantir needs to keep executing, right? They need to keep expanding that customer base. They need to keep bringing in increasing amounts of revenue and maintain that growth rate. And they will. I really do believe that they will. So let's jump into the options pricing. So let's take a look at shorter term option pricing, just as this kind of gauge of what's going on out there. Of course, we've seen the VIX come way, way down from what we saw maybe 6 weeks ago, and there's been a sort of return of calm to markets. Of course, we had a little bit of activity on Friday with Iran, Israel, and of course that got volatility levels up. We saw the VIX jump a decent amount, but not to anything sort of in what I would call kind of a panicky area. So if I take kind of if we take a look at the VIX futures curve, really nothing too panicky here, right? So we saw the VIX kind of pop up a little bit, and it just tended to relax a little bit. But generally, you can look at the shape. This is a contango, right? So this is where the VIX futures are sort of in a nice rising shape, which means we aren't seeing a lot of panic. In fact, we're seeing quite a bit of calm underneath the surface, right? So that kind of durable calm. So even when the S&P sells off a little bit, if you continue to see this sort of shape in what we would consider sort of the main measure of fear, the VIX is important, but underneath the surface, you want to know what these futures are doing. And really, it's not kind of showing that there's a lot of fear out there. Can that change? Of course. I'd be looking for these front two futures to kind of flatten out. And if they invert, then it's definitely time to be a little bit more worried about the broader market. But for now, things are kind of not too bad looking, I'd say. Now let's take a look at, hopefully we don't escalate too much more, but let's take a look at historical implied volatility. So this is the short term. So just give us a little gauge of what's happening. We can see it's really come down from those elevated levels as realized vols come down, right? So that just means things are just getting more calm, and we have a sort of steadily rising stock, which is often associated with compression of option pricing. But what we are interested in as we look at Leap's explosion and the other parts of the portfolio is something a little bit more long term. So if we take kind of 360-day, Leaps tend to be at minimum of a year. So let's take a look at option pricing over the next year. We can sort of see that we've come down a little bit. It's not as cheap as some of the other names that I've been talking about, some of the NVIDIAs of the world, where we see really, really exceptionally low option pricing, which gets me a little bit excited. But having said that, this has that amazing explosive potential. It is definitely not something you get massively aggressive into until you start to see better momentum. And then I think you can kind of lean into it with an explosive trade. Now, if you join the service, you're going to get that VIX, you're going to get that Leaps explosion trade, right? We have a regular sort of steady Eddie kind of Leaps trade in there, but you're going to get that explosion trade this weekend if you sign up. And we have an amazing deal going on right now. I'm not sure how much longer it's going to last. So we see this kind of slightly elevated premium. So there's a little bit of what we call Vega exposure, but really you're in this trade for what we call the delta, right? You're in this trade for a directional, massive, massive upside move. And that renders the Vega less important over time. But it is there a little bit. So if things kind of sit around for the next 6 or 8 months, there is some risk that option pricing gets a little bit compressed. But really, I think you want to keep your eye on the prize, which is direction. Term structure, pretty decent. I mean, we've seen some where they kind of, press a little bit more at the long end of where the option pricing is. And this looks okay. Like, I'm not seeing anything particularly concerning here. Certainly short, low option pricing in the short term because nothing seems to be happening very much. And then as it kind of extends up into the summer months, we see a little bit of a push upwards and then slowly going down into those further expiries. So nothing too concerning right there. Let's look at the skew, and what skew means is just, how expensive are the out of the money puts, how expensive are the out of money calls. And what we see in the short term is things are really, really kind of very unexcited, right? So I don't think there's a lot of, as I've been saying for about 500 or 600 points in the S&P, I don't think people are super, super excited about the upside. And I think that creates a bit of an opportunity. If you look at the longer term skew, very, very flat. Flat as pea on a plate, as they say. So very, very flat, and I think that creates our opportunity for the explosive trades, right? The explosion, the Leaps explosion trades are really, really looking kind of juicy here. Now, it is an expensive stock, so even those options tend to be a little bit higher, but much, much better for a smaller account. And that much, much higher explosive potential there. So let's take a look at some of the trades. Now, I think you want to sort of look at a couple of different ways to approach this. One is sort of a bit more steady eddy. You're going to do something with a bit of a higher delta, which is going to give you something that's a little bit more akin to a stock replacement, right? So I think that's what you're actually starting to see out there in markets right now. I think you're seeing people kind of sell some of their stocks and replace it with options because they're a little bit uncertain of that upside. And you can see the volumes to the upside are making market makers quite short. So upside, in fact, that's one part of my thesis, is that I think there could be just a massive melt up in the market in general, partially precipitated by AI and this sort of new phase, but it could also be pushed along by flows. So if you guys are interested in stuff like that, look at my other videos. I usually write in deep dives. We get into flows and gamma and all those fun, funky things to talk about. Not super, super important for what we're doing here, so don't worry about that too much. But I think there could be some really interesting potential for a massive, massive melt up. Not advice, but I think it's there, right? I think it's there. People just aren't quite in this market, although they've really come in the last few weeks as well. So the flows aren't quite as offside as they were maybe about a month ago. So if I kind of look down here, I would pick something like, for me, I think I'll come in, I have positions, but I'm going to go in and pick probably a September 2026 110 call or a 115 call. I don't mind going with a bit of a lower delta just because I think, I think you can kind of cut down a little cost. I'm quite bullish on this thing. But if you were worried about the level of option pricing, you might go a little bit higher delta, right? You could go even, 83, 85 delta just to kind of minimize that time value. But of course, you're going to be investing a little bit more in something like that. So I think kind of the happy medium there is going to be probably like a 100. Get one of those maybe for around 59.90. One contract's going to cost you about $5,900. That's going to allow you to control a whole bunch of Palantir for about, about 30%, 35%. Well, what's that? About 40%, for about 40% of the cost of the stock. So you're going to control a very, very similar amount of stock in a sense. So this is something where I would go in, I'd probably pick maybe like 4 or 5 of these. And then if we get a pullback, then I'm going to start to add. I may adjust the strike price. So that's going to give you that sort of little bit more like owning the stock, but with the benefit of lower decay from a longer term option. And that not having to kind of commit as much. So if this thing just completely implodes and goes the wrong way, well, you actually have a pretty good amount of protection there just by virtue of having limited risk in this thing at about 100 strike. So I think you could go 100 strike, 105 strike, somewhere around there. Now, for a little bit more kind of oomph to the upside, and we looked at the skew earlier, so you're not paying up too much for implied volatility. What that means is you're not relatively paying up big time for something that is priced. If they're pricing those upside options for an explosion, then they tend to be a little bit more expensive. But I'm not really seeing that there, to be quite honest. So I think that represents an interesting value to me. So to get in, and if you're really, really bullish on this thing, to pick up like a 190, maybe even go into like a 175, just to give you a strike that's a bit closer to where we are. Now you've got a good sort of over a year, maybe like 13 or 14 months with a September 175 call. That's going to give you some real punch. And I think if this thing starts to kind of panic move to the upside, there is also the possibility that option pricing firms up. So it's something that I would say more in stocks, in options that are already very, very low. These ones are a little bit higher, so I don't think it's as much potential. But I think there is that potential if there's a fever that kind of grips this sort of theme and stocks like this. There's a potential for the option pricing to actually explode, which is going to give you, again, that Vega exposure, right? So you don't have to know too much about this stuff. You learn it in Hedged Leaps and the program, but we talk about stuff like that because I think some people want to know more about it and some people don't want to know, right? And that's perfectly fine. It's always teach people to fish or just give them the fish, and either way, it works just fine for me. So that's about it. I think that's going to give you that kind of explosive convexity to the upside that could really give you some very, very interesting potential. I think this stock over the next couple of years could probably triple, quadruple if the fever really, really grips markets. Triple to quadruple. Not financial advice, but it could triple to quadruple. And if you sort of do the math on that, you buy a 175, you're going to potentially probably turn that $30 into maybe 200. You could turn that into 200, maybe even more. So very, very big potential. So that's it for today, guys. I'm going to do another video on Palantir because I think it's just amazing, and I want to dig a little bit deeper into the company, and then we'll do an update on the options, and then of course, if any of you are in LeapsTrader, you'll be getting more frequent updates. I do them all the time for members. So again, here's the quick deal. This week, you're going to get that $100 coupon. You're going to get the full option bootcamp course. A couple of guides and places that I'm looking that I think are really very interesting for this AI theme. And then the big, big bonus, of course, again, is for those who sign up, you get the full Crush the Premium Enhanced Wheel Hedging course. This is an amazing, amazing course. So this is more geared towards income. This is not about leaps. This is about generating 2% a month, 3% a month, a little bit more potentially in those kinds of environments where that makes a bit more sense. So really, if you combine Crush the Premium income with the leaps, which is a little bit more of that leverage, a little bit about that oomph to the upside, that really kind of gives you the best of all worlds, and it's going to teach you about how to actually find stocks. Even as an investor, you're gonna really, really enjoy that course, and then give you those rules and guardrails that are going to help you stay in the right lane. Right? That's really what it's about: staying in the right lane, especially on the income side. On the income side, it's as much about staying out of problematic situations as it is about finding good trades. It just is. You just see this all the time. Somebody can have a 95% win rate and still lose money. How does that happen? 95% win rate and you still lose money. It's because when things go wrong, they don't do the right things, or they're getting into situations that, and I get into arguments on Twitter about this stuff all the time with people. They're like, yeah, I want to trade this crap. And I say, listen, you got to be super, super careful. So there's really much more to it than clicking that buy or sell button. It's everything that goes into that decision making. So I hope you guys enjoyed that. Check it out. 1 year of the program for $8.99 minus the $100, $7.99, and you get Crush the Premium, which is worth $1,000 right there. People buy this all the time for a little bit less than that because I usually give a little discount. So people get this all the time for $877, $879. You get that free plus a year of Leaps, Hedge Leaps Trader, which includes Hedged Core, includes Hedge Leaps AI, and then of course Leaps Explosion. So hopefully we'll see you guys in the next video very, very soon. I think this is going to be a very interesting market, so stay tuned. I'll be posting.